Hello, this is Japanese Economic Review Channel. Welcome to today's briefing on the July 2026 Consumer Confidence Survey. This survey, conducted by the Cabinet Office on July 15, 2026, captures the immediate expectations of households nationwide. Today, we will unpack the latest consumer sentiment data. Our focus will not just be on the headline figures, but on a fascinating structural paradox defining the current Japanese market: the coexistence of nominal optimism and deep-rooted inflation anxiety. Let us begin by looking at the aggregate trend. As shown here, the seasonally adjusted Consumer Confidence Index rose to 34.9 in July 2026, marking a solid 1.1 point increase from the previous month. This is a critical milestone, as it breaks a multi-month plateau and establishes a steady 2-month recovery trend following the sharp drop to 33.3 back in March 2026. The data signals a quiet but genuine resilience in overall household sentiment, defying expectations of immediate decline in the face of macroeconomic pressures. When we break down the composite index into its 4 core consumer perception indicators, we see a synchronized improvement across the board. Overall livelihood rose by 1.1 points to 33.1, income growth climbed by 0.6 points to 40.9, and the willingness to purchase durable goods showed a modest 1.0 point uptick to 25.6. The standout driver is clearly the employment environment, which surged by 1.7 points to 40.1. This surge reflects strong job security and labor market tightness, serving as the main engine for July's consumer optimism. A deeper dive into the raw distribution of responses reveals where consumer sentiment is clustering. For livelihood, income growth, and employment, the vast majority of households, over 50%, now report their outlook as unchanged. We are observing a positive, distinct migration of consumers moving away from worse responses toward unchanged. However, consumers remain highly defensive when it comes to spending. A staggering 76.9% still believe it is a bad time to purchase major durable goods like appliances or vehicles. A vital buffer in today's economy is the wealth effect. In July, the asset value indicator rose by 1.6 points to 46.4, notably outpacing all core livelihood sentiments. Driven by strong performance in stock and property markets, nearly 1 in 5 households, specifically 18.1%, expect their assets to increase or somewhat increase over the next 6 months. This appreciation of assets provides a crucial psychological safety net, creating a clear sentiment divide between asset holders and wage earners. Here is the most dramatic shift in modern Japanese economic history: the complete death of the deflationary mindset. An overwhelming 92.8% of households anticipate that prices will rise over the coming year. Even more striking is the concentration of extreme inflation expectations. 52.1% of all households expect prices to rise by 5% or more. In contrast, the portion of the population expecting stable or falling prices has shrunk to almost zero, indicating that high inflation is now a firmly entrenched expectation. Stepping back to look at a 10-year horizon, we can identify a permanent structural shift. Prior to 2021, consumer inflation expectations fluctuated wildly, but they have now stabilized at an elevated plateau. This entrenched inflationary expectation acts as a permanent anchor. It explains why the willingness to buy durable goods remains severely depressed, even as overall labor market optimism rises. Japanese households are adjusting to a new high-cost paradigm, permanently altering their purchasing behavior. This brings us to our core diagnosis: the nominal real sentiment divide. On one side of the scale, we have nominal optimism, fueled by a tightening labor market, plus 1.7 points in employment, and rising asset valuations, plus 1.6 points. On the other side, we have structural anxiety, anchored by entrenched inflation fears. Consumers feel confident in their ability to earn, yet they remain highly defensive about their actual purchasing power, leading to a highly bifurcated spending landscape. Finally, let us review the methodology that guarantees the statistical precision of this data. From a macro base of 54.11 million Japanese households, a stratified sample of 8,400 households is surveyed. For this July 2026 cycle, we achieved a stellar 77.7% response rate, representing 6,529 valid households. The survey utilizes a 15-month rotating cohort to ensure both longitudinal stability and fresh data. All aggregate figures undergo strict seasonal adjustment using the standardized X12 ARIMA model. Thank you for your time. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.